Hi guys, welcome to one more YouTube video, and this video is going to be one of the very important video, one of the special video, because in this video I'm going to reveal one of my secret which I never shared on anywhere on the YouTube videos. Many professional traders use market depth but they don't share it openly. Market depth is one of the hidden secret in trading. Only few people know how to use it and they master it. Start using market depth and also analyze with the chart. Don't rely only on market depth. Along with the chart, you have to use market depth if you are trading stocks. Actually, this video, that is Untold Secret in Day Trading, is the market depth, which I wanted to share it only in my new course, that is Day Trading in Stocks, which I'm launching next month. Many people, maybe it's very difficult to understand if you are very new to market depth. So watch this video again and again to understand market depth. In detail market depth I discuss in my course, but here you will at least get the basic understanding of market depth. And this video is especially for people who want to trade in stocks. But if you want to trade in Nifty Bank Nifty, it doesn't mean that you should not watch this video. But I don't use market depth when I'm trading in Nifty Bank Nifty. But when I'm trading in stocks, yes, I do use market depth. So if you are a trader, you don't trade in stocks, but still watch this video because you are going to learn something new in this video which you have never learned. Okay guys, so welcome to this presentation on Untold Secret in Day Trading, that is the market depth. So now let us see what all the things you are going to learn in this video. What all the things you will learn in this video about the market depth. First, you will learn what is market depth. I'm going to discuss briefly about the market depth. Then I'll discuss mistakes many traders do in understanding market depth. Few people have half knowledge on market depth and what is the mistake they do it while understanding market depth. And I'll discuss how operators trap retail traders by manipulating market depth. And then I'm going to discuss how to make use of market depth and tricks to know the direction of stocks by interpreting market depth. So this all will be discussed in this video. Market depth is a measure of supply and demand for a stock or any instrument. Is based on number of open buy and sell orders in a given stock. Very simple, right? For example, there is a stocks XYZ stocks trading here. So if there is a XYZ stocks, or just imagine it can be some product. So it will tell you how many buyers and how many sellers are interested in the stocks. Suppose it will tell you that there are 100 people interested to buy that stocks and there are 150 people are interested to sell that stocks or any product, just for your understanding. So these are the buyers, these are the sellers. Market depth will tell you the strength of buyers and strength of sellers for that particular stock. The greater the quantity of those orders, the deeper or more liquid that stock is considered. That means if the quantity is more in thousands or lakhs, that means it is more liquid. That means more and more people are interested in that stocks. So you should look for stocks which are trading with very big quantity. So that means it's more liquid. That means more and more retailers are looking at that stock. Market depth is used by many professional traders to assess the direction of a stock price, like whether stock is bullish or bearish. Yes, all these days you have seen how I look at the charts to know the direction of the market, bullish, bearish or flat, right? Also, you can use the market depth to know whether that stock is bullish or bearish or flat. That doesn't mean that you don't have to look at the charts. Yes, you have to look at the charts, but along with the charts, if you know how to read the market depth, then you have an additional edge. But let me tell you, it is more useful for stocks rather than Nifty and Bank Nifty. Every stock has a bid and ask, and you can place order at bid price or ask price, or also it is known as offer price. Now let's go to the live market and let us see what actually I'm talking about bid and ask. Okay, this is the Zerodha chart, right? You can see that Zerodha chart. This is my watch list, and in my watch list I have shortlisted some stocks. For example, you can see that this all the stocks I shorted, like Godrej, Zomato, Polyplex, Manappuram. These are the stocks there in my watch list based on my scanner. I have a scanner. Which scanner I use it for shortlisting the stocks that I will discuss in some time. But these are the stocks there in my watch list along with Nifty Bank Nifty. So What is the bid and ask? For example, let's go to this Godrej CP. Okay, so if you come here, you can see this is the bid and ask. This is the bid and ask or bid and offer, whatever you call it. That means there are total this many buyers are 2,39,000 buyers are interested to buy Godrej CP, and 3,30,000 sellers are interested to sell that stock. Bid means this is the bid price and this is the offer price. That means sellers want to sell the stock at this price, for example 894.85, but buyers saying that I want that this price. So that is what known as bid price and ask price. So this is the most important at the top, because that this one will get traded first, then next comes this. Okay, so now you have seen every stock has a bid and ask, and you can place order at bid price or ask price. That means here, if you are interested to buy Godrej CP, you can place the order at this price or this price, 893.50 or 893.75. So you can place the order at bid or ask. Bid is a place where buyers place the order and wait for someone to sell them share at that price. Bigger the spread, bigger the movement in stock, but high volatility and more sleep. Now let us see what is the meaning of spread. So what is the spread? Spread is price between this and this, right? So how much spread is here? You can see that here 894.10 and 894.20, right? So that is 10 paisa is the spread. So if spread is very close, that means the stock is liquid. That means there is no much risk, right? Sometimes spread can go by few more points. For example, earlier it was 10 paise. Now you can see that it's almost 30-40 paise, right? So it can fluctuate. It will not be exact. So here I can say that this is the liquid stock. Now let us see any stocks which are not liquid where spread is very big. Okay, now look at these stocks. Okay, this is the Honeywell Automation. So this stock is Honeywell Automation. Just look at the spread. Here you can look at the bid, 43,928 and this is 986. Almost 50 rupees difference, right? So that means if the spread is more, that means it is less liquid. Even though this stock, look at this Honeywell Automation, look at the movement of the stock. This stock came in my scanner, so I have put it in my watch list, and look at the movement of the stock. Non-stop, strong, bullish movement, right? Many times what you think that, oh, look at this, bullish, and currently it is trading at 44,022. So what you think that, oh, I'll buy this at the current price. But you know what? This kind of stocks with big spread, immediately you will be in the loss. For example, you'll place the order at, you think that, oh, currently trading at 44,090, but when you place a buy order, it will get executed at this price, 44,100, and currently it is this price, 44,062. If you want to sell, immediately you will be in loss. So let us do one thing. Let me buy one share of Honeywell Automation at the market price, and let me give you that example how I said when spread is very big, immediately you will be in loss. So I'm taking one lot of Honeywell Automation, and currently it is showing me that it is trading at 44,094. All right. So let me place the buy order, and you will see that immediately I'll be in loss. Okay, I place the order. Can you see my order book? 44,094. That is the price it got executed, and I sold it, and you can see that immediately I'm in a loss. Why I'm in immediately loss? Because it was sold at this price. It was sold at what is the bid is showing at this price it got sold. You can see that immediately I sold it and I'm in a loss. Why it happens that many times? Because you look at this price thinking that you will get at this price, but you will not get at that price. So that's why I always remember, when you want to buy, you will be executed at this price, not at this price. So that's why it's better to avoid stocks which have a very big spread. So that's what I discussed. Bigger the spread, bigger the movement in stock, but high volatility and more slippage. So you can see that there can be a bigger movement. Look at this Honeywell Automation, how it is moving since morning, right? Huge movement. That's why when you're taking that trade, you should take the trade when spread is not much. Smaller the spread, movement will be smaller, but less volatile and less liquid. More closely stacked bids and asks means more liquid that stock is. What I mean by more closely stocked bid and ask, look at this. For example, look at the Tata Elxsi stock. Look at the spread between the both. Hardly there is 10 paise. Look at the difference between all the orders. There is how much? 20 paise, 10 paise, 5 paise, right? So that is the difference between all the orders here. So that's what I said, when very closely stocked bid and ask means more liquid stocks. Now, mistakes many retail traders do in understanding market depth. If total buyers are more, then they think demand is more, so stock is bullish, and start taking long position by buying that stocks. That means if they think that buyers are showing more than sellers, that means stock is bullish, stock will go up and they start buying. And then after that, they see that even though buyers are showing more, but the stock is coming down. So that is the mistake many traders do it. So let me show you some stocks where buyers are in very big quantity. Okay, for example, look at this stock, that is the Max Health stock, right? This is the Max Health stock. Currently, on the day, it's up by 7 point, but currently, if you look at the trend, it is coming down. But if you look at the buyers and sellers trend, look at this. Buyers are almost 41 lakh 60,000 and sellers are 3 lakh 55, right? It is almost more than 10 times buyers are sitting here than sellers. If you show it to anybody, even though he is not from stock market, if you show him this figure, whether buyers are strong or sellers are strong, he will say that buyers are strong, right? Because of this number. Here only 3 lakh 60,000, but here 41 lakhs, it's almost 10 times. So many retail traders, what they think, they look at this number, look at, see how big buyers are, they start buying here, think that market will go like this, but only to see that market is coming down, even though buyers are more number. So this is a trap by operators for retail traders to buy this stock, thinking that there are huge numbers of buyers and they will get trapped. Why you should not get trapped? Why it's a trap? How to know it's a trap? That I am going to discuss in coming slides. Now just understand that just by looking at this, you can't buy the stock just because buyers are more than sellers. So that is what I was telling you, that is the biggest mistake. Total buyers are more than sellers. They think that demand is more and stock is bullish and start taking long position by buying that stock. Same thing opposite also. If total sellers are more, then they think that supply is more, so stock is bearish and start taking short position by selling that stocks. So just we have seen in the Max Health how there was a huge numbers of buyers and people think that it's a bullish stock. That is the biggest mistake many people are doing by taking the position based on total number of buyers and total number of sellers. So if it was so easy that just because buyers are more, then buy the stock and stock will go up. If sellers are more, just sell the stocks and stock will go down. If it was so easy, then everyone would have become Rakesh Junjunwala, right? Now, how operators trap retail traders by manipulating market? Total buy order you see in market depth is not real buyers. They are opportunist buyers or fake buyers created by operator to trap retailers to buy the stock. So that means they are fake buyers. For example, if you see 41 lakh 93,000, don't get excited thinking that, oh, look at this 41 lakh buyers are there. That means I have to buy and stock will go up. Not every time, because here most of them are fake buyers. These are the orders what you see in the market depth. You should remember that this may not be real buyers. They are just manipulators, just to give an impression to retailers thinking that, oh, total there are so many buyers. So you should know that these are limit orders. So that means, so these are the limit order. So just to trap the retailers, operators manipulate the order book by putting the fake orders. So don't get excited by looking at this big orders. What actually you should look for in trading? This is what total traded volume. This is what your focus should be more on, not on this, not on this. This both are fake. Volume, what it will show that what is the total traded volume. So that will tell you that currently how many people have bought and how many people have sold. As I said, there most of the time fake buyers. If price start falling, most of the time they will even cancel their order before it can reach their price. For example, if stock is trading at 195, there is some fake order will put at 180. You know that they know that from 195 to 180 it will not fall so easily, right? 15 rupees, that means more than 10%. So they just go and put some 10,000 quantity. Then what happens? So you will see that when somebody put 10,000 or 20,000, it will increase in total buyers, and retailers think that, oh, look at this, buyers are increasing. So these are the fake orders. Big hand smart money, that is FIIDIS, monitor the counter, and once they get their price, they directly place the market order. Most of the big players, that is the FIIDIs, they don't wait in the queue placing the limit order. They directly place the market orders. So market orders you will not see in the market depth. Only limit order you see in the market depth. And market orders you will not see here. These are only limit order. Up to top 5 is okay, but anything you'll see that at the bottom, they're most of the time not a genuine order. Now let us discuss the right way to use market depth and tricks to know the direction of stocks by interpreting market depth. Now look at this. Just I am giving you an example. Look at this order book. Buying quantity is 10 lakh 20,000 and selling quantity is 15 lakh 50,000. It is currently at 10 a.m. in the morning. And total traded quantity, that's what I shown you in the live market, that volume, total traded volume, what you see is total traded quantity is showing 80 lakhs. But same time after 5 minutes, you see that buying quantity has increased from 10 lakh 20,000 to 20 lakh 20,000. Suddenly there is an increase of 10 lakhs and selling quantity is same. Selling quantity is same. Only increase in buying quantity, but total trading quantity is almost same. So what it means? Means market is bullish, bearish, or flat. Most of you must be thinking that market is bullish, right? From 10 lakh 20,000, now it has become 20 lakh 20,000. 10 lakh new buyers started getting added here. Now let us see what actually is. Increase in buying quantity. You can see that there is an increase in buying quantity. No change in selling quantity. You can see that selling quantity is same, 15 lakh 50. Here also 15 lakh 50. No change in total trading quantity. No change in the volume, right? There is no change in the volume. Volume is same, even though there is increase in buying quantity. Interpretation is nothing. So that means it is nothing. Even though there is a big buyers, it is nothing. Stock direction is flat. Why stock direction is flat? It's not bullish, even though there are 10 lakh additional buyers here. That's what I discussed in previous slide. Most of the time, these are fake buyers. Anybody can go and place 10 lakh order and it will increase here. But that doesn't mean that you are really interested to buy. Currently, maybe it is trading at 284. You can go and place some fake order at 270, 10 lakh quantity, knowing that it will not fall this much. And if even though it starts falling, you immediately cancel the order, right? So that's why don't get fooled by looking at just buy quantity. Now let me show you second example. Here you can see that buy quantity is 10 lakh 20,000. After 5 minutes, buy quantity is same. Sell quantity has increased. Sell quantity earlier was 15 lakh 50. Now 10 lakh has increased. But total traded volume is same. Now what you think that, oh, market is bearish, right? Because earlier it was 15 lakh 50, but now 10 lakhs more have come to the selling side. So that means market has to crash. But you can see here, volume is same. So here it will show you only total traded. What I said earlier, these are not total traded. These are just limit order, still not traded. So no change in buying quantity. You can see here, increase in selling quantity 15 lakh 50,000 to 16 lakh 50,000. No change in trading quantity or traded volume. Interpretation is nothing. Stock direction is flat. Why stock direction is flat? That means somebody has just added selling side, doesn't mean that it's already traded. How to know whether it's traded or no? We should look at the total traded volume. Now, third example. Here you can see that no change in buying quantity, right? No change in buying quantity, but there is a decrease in selling quantity. This is interesting. So you can see that there is a decrease. Earlier is 15 lakh 50,000. Here 50,000 volume have gone, right? And increase in total traded quantity. Earlier it was 80 lakh. Now 50,000 have been traded. So what is the interpretation? Some big player bought the stock. Why player? Because they have to, if they have to buy, they have to take it from here only, right? If you want to buy a stock or buy a product, you have to take it from sellers. When a person who has placed order for 50,000 market order, then it has to reduce, right? It has to reduce. 15 lakh 50,000 has to become 50,000. And here also it is showing 50,000 more. That means it already got traded. That's why I said big players, FIIs, DIIs, they don't place limit order. They just look at the market. They just look at the counter. Once they see that that price has come, just they punch the order at the market. Stock direction is what? Bullish. That means some big players started buying the stock in big quantity. So direction is bullish. Here, drop in buying quantity. You can see that earlier is it was 10 lakh 20,000. Now 20,000 have reduced, but no change in selling quantity. Selling quantity is same, increase in total trading quantity. Here you can see that 20,000 have been reduced from buying quantity and traded quantity also increased. So that means 20,000 got traded. So interpretation, some big players sold the stock. So when somebody sell the stock, then it has to reduce from the buyer's side, right? So that is what happened. Here, some seller went and sold the stock to the buyers. So 20,000 buyers have reduced. So what is the interpretation? Stock direction is bearish. I understand that this may be a little bit confusing for people who are first time looking at the market depth, who don't know anything about the market depth. So my advice is start, replay the video, see it again and again, then you will understand it. In the first attempt, it may be difficult to understand for new traders. So this is one of the way to understand the market direction. So what is the conclusion? Conclusion that increase in total buying quantity is not the indication of bullish market. Instead, drop in selling quantity shows big hand bought the stock. That means it is bullish sign. Increase in total selling quantity is not the indication of bearish market. Instead, drop in buying quantity shows big hand sold the stock. Focus on big quantity near the top 5 bid or top 5 asks to know the support and resistance. So that means your focus should be only on 5 top. So what I'm trying to say that look at the only top 5 depth. Most of them, these are the genuine who are near to traded price. When you are seeing that somebody is putting 5,000, 10,000 quantity here, that means he is just putting it fake order. Look at the 5 depth in the top 5 in bid and ask. Most of the time they are the real buyers or real sellers. Okay, for example, look at this. There is a bid. Okay, this is the bid and currently trading at around 95, 96. And you see that there is a big quantity at this price. 90, 91, 92, you see that huge quantity here. So that means it's a big support. So I said top 5 bids and top 5 asks most of the time genuine. So if it is trading near to the current price, then most of the time it's genuine. And this also can act as a support. So that is what the one of the way to know the support and resistance by looking at the market depth. And also it can tell you about the breakout. For example, you see that on the ask side, this is on the ask side. This is on the ask side. You'll see that it's thinly traded here, but near the 100, there is a 4,000 quantity. You see that there is a 4,000 quantity. That means it's a strong resistance. If suppose this 4,000 breaks, this entire 4,000 get traded, then you can see a big movement on the upside. That means 100 got broken. And once all the order 4,000 becomes 3,000, 3,000 becomes 2,000, 1,000, then it comes to single digit. That means all the orders are getting traded, so immediately you can see a big move. So that can be helpful in scalping, breakout trades, and also knowing the big support and resistance. So if you are a trader who trade in stocks, my advice is start using the market depth, and slowly you'll understand that it can give you better edge in trading along with trading with the charts. So guys, that's about market depth. It looks very easy, but in the live market it looks little bit complicated. So that's why I said you need to have good experience to use market depth. So start using market depth if you are trading in stocks so that you can take high probability trades. So market depth is discussed more detail in my upcoming course, day trading in stocks, which I'm launching next month in September. So in that course, along with market depth, I discuss various day trading strategies also. So wait till September to announce my new course, day trading in stocks, especially for people who are interested to trade only in stocks. So that's about today's video on market depth. I'll see you soon with a new educational video. Until then, bye and take care.